Let's get a check now of what's happening in the business world. Our business editor, Kate Moody's here. Hi there, Kate.
Hi, Tom.
Let's begin in the UK. A lot of talk about vaccines all over the place, but there, people are talking about this no jab, no job policy. What's all this about?
Well, it's something that's emerging in the private sector, a possible idea to try and ensure a safe workplace. The British government has said it will provide vaccine certificates or passports for its citizens if they're required for them to travel abroad, but that it won't be making proof of vaccination part of its domestic agenda. Some companies are looking into making the shots mandatory for their employees, a controversial stance that could flout rules against discrimination. Yana Lee explains.
Vaccine passports to travel abroad, but not to go down to your local pub. This is how the UK government sees its way out of the COVID-19 pandemic.
We're not looking at the domestic use of vaccine passports. That's not in our planning. As I said, as the Prime Minister described, it'll be the national vaccination programme combined with rapid testing that I think is the way forward.
Zahawi admitted, though, that private businesses could very well demand proof of vaccination from employees. One nationwide care home operator and a London-based plumbing company have already publicly announced no jab, no job policies. But employment lawyers are divided over the legality of such strategies. On the one hand, management could argue vaccines ensure workplace safety. On the other, it could be seen as discriminatory. Most of all, employers would be asking sensitive medical information from their employees. Meanwhile, major trade organisation CBI says the focus should be on workplace testing instead.
Workplace testing is gaining momentum, but far more firms need to be encouraged. That's where the business focus is right now, rather than clamoring for the introduction of a domestic vaccine passport.
So far, more than 15 million people have received their first dose in the UK, a relatively successful campaign that has boosted employers' confidence. Recruitment company Adzuna saw a 16% jump in new job postings between the first and last weeks of January.
Let's check in on the day's trading action now. The major European indices closed lower. Stocks in Milan and Frankfurt were down over 1 percentage point each. Shares of the luxury group Kering dropped 7% in Paris on disappointing quarterly results from its Gucci brand. Wall Street has been shrugging off some stronger than expected economic data. The tech-heavy Nasdaq down about 0.75 percentage point this hour. The Dow Jones just slightly above the flat line. Treasury yields are trending higher. That's putting pressure on U.S. stocks. Freezing temperatures and fierce winter storms have knocked out power and disrupted business across the U.S. state of Texas. Samsung, NXP, and Infineon are among the companies that have shut their plants in Austin until further notice. Analysts say the closures will aggravate an already global shortage of semiconductor chips, which has led car makers around the world to slow down production. If the chip shortage drags on, manufacturing of electronics could also be affected. U.S. shoppers increased their spending last month, was boosted in part by a $600 government stimulus check. Retail spending jumped over 5% in January compared to small declines in the last 3 months of 2020. Americans invested in electronics, appliances, and home furnishings. Much of their shopping was done online, with internet spending up 11%. Consumer spending is the main driver of the U.S. economy, accounting for over 2/3 of economic output. The Biden administration is pushing for another stimulus check to be included in a $1.9 trillion recovery package. This data, Tom, probably going to underscore the administration's point that these stimulus checks can really help things get moving in the U.S. economy.
Let's hope they work. Thank you very much indeed. Our business editor, Kate Moody. Thank you.